So, housing market, are there things that uh, home buyers can do to actually win deals in the market today? We're going to talk about that. And welcome again to another Hump Day Real Estate with Kendall in the DMV. And we have a lovely guest. Who do we have with us today?
We have your loan officer, Michelle Larkin. How's everyone?
So thank you so much for joining me, but at such short notice. Tell the people a little bit about yourself.
Oh, okay. That's fine. Let me think. Well, I'm a little bit darker. I just got back from Central America a few days ago. I've been in real estate actually for 21 years, believe it or not. I've been doing loans for 14 years. I got into loans and said I wanted to learn this business. I wanted to learn it well, and I did that. I've been happily, closing loans, helping people, finding creative strategies, finding ways to help my agents as much as I can all day, every day. So that's actually what I love, and I'm going to continue to grow. And I'm assuming that's why I'm here, right?
Yep. So we're in this crazy, and well, the last 3 years, I guess every time I turn around, I'm doing a show or talking to somebody, I'm saying crazy market because it's been
Yeah,
crazy the last 3 years or so.
yeah.
But there's I'm quite sure there's a myth out there. Should I wait to move and until mortgage rates fall? What do you say the reality of that is?
I said the reality of that is absolutely not. Real estate is one of your best investments, no matter if you're going to buy real estate to live in or if you're going to buy real estate to have it as an investment property. I call the old rates Obama rates. And when I say that, people understand because it was a time period of rates. And we're not projected to go back to Obama rates. However, there is a projection in 2024 that rates will come down a little bit, not significantly back to Obama rates, right? But possibly down a little. They were projected to come down a little in the first quarter of 24. So if you're hearing anything on the news right now about, oh, rates are up. No, rates are about the same. They just didn't go down. So sometimes the news spins it a little differently. But the point is, they haven't gone down quite yet. But if you look at rent versus mortgage, rent is totally out the window. You're never going to see that money ever again. A mortgage is an investment into yourself. And I ask people, are you comfortable with your payment when you're getting a mortgage? If you're comfortable with your payment, then let's do it.
Gotcha. Now listen to this one. So this myth is, man, people are just going to wait until the prices crash. And this is what I say on this. You wait till the prices crash. The thing that's going to happen to you, if you even think the price crash, what do you think is going to happen? More people are going to jump into the market. What do you think?
Correct. I agree with you 110%. Is that if prices go down, it's just supply and demand, right? So if prices go down, then there are going to be more people in the market and create even more competition than what we have now. So that's just another reason not to wait, in my opinion. And I don't believe that there's that sort of crash on the way, not from my perspective, not that big of a crash.
Yeah. But even if it did, right?
Mhm.
Um, again, these folks are just going to have a tough time out here. It'll end up because the inventory is still a problem,
Yes,
even though inventory is starting to creep up a little bit. But
yes,
that's only based off of, I believe, from folks not being in the market. So if you
yes,
put those people back in the market, then
yes,
that inventory won't look as good as what it may appear to look right now. So
yes.
with that being said, so I won't be able to find anything to buy. Um, I don't know if that's correct. And one of the things that I say to that is I want my buyers to think like an investor when
Yeah.
they buy. And so it's not about going to the market and making sure that you have eat off the floor gorgeous, but it may be to go into the market and look at the semi-ugly house,
Yes.
just like an investor would, and maybe buy that house and then put all your tastes into that house. What do you think?
I agree. I was having a conversation with a client earlier, And she was like, Michelle, I just need a little starter house right now. I don't need the most fancy house. I don't need the most expensive house right now because I'm going to put a little work into it and just move on to the next house. And I totally agree because most people in today's day and time, they're not like our parents, right? They don't live in their houses for 30 years. Most of them live in their houses for 3 to 5 years. And if that's the case, then, even in her case, this is your starter house because in 3 to 5 years, she's going to be upgrading, buying something else. And when that time comes, there's a very good possibility that she'll have equity in her home, and she can take that equity and instead of bringing money to the table, she can use that equity to go on to the next house. So absolutely, it's an investment.
Yeah, yeah, yeah. But oh man, I got this crappy job. Can't get 20% to buy a house. What's the reality on that?
The reality is you typically do not need 20% to buy a house at least when you're buying your primary house. If you're buying first time, a lot of people use FHA. FHA requires 3.5 down. Some people will use conventional, which is still a great product. It is not government backed, such as FHA. That requires 5% down. And then there are other programs such as USDA, which is a rural type of loan, which are good for rural areas. It's 100% financing, so you need 0% down. And then there are other programs such as my lovely in-house program that covers 100% of the down payment and sometimes 5%, which is the down payment and closing costs. So you need 0% down with that as well. So there are products out there where you do not need money down or you need a significantly less amount than 20%.
Gotcha, gotcha, gotcha. Well, I just got into the market and I found a lovely house. My agent wrote a contract, right? And for the second time, we got beat out. And there are multiple reasons why we got beat out. But I hear that you have something that may help with something like that.
You heard correct. So, yes, so I do have a wonderful product, which is a company product that we've created to give buyers an edge when they're making offers. And that edge would be if my loan does not close, then the seller will receive $2,500. So typically there's about 30 days from the start of the loan process, once you're under contract, into the end. And that product does require that 30-day timeline. But if for some reason we are not able to perform for that buyer, then the seller would actually receive $2,500 from the mortgage company as a I hate to say we're sorry because it sounds like a weasel word, but it does give a guarantee to the seller, an extra layer of guarantee saying, listen, we are that confident that we can close this buyer's loan and this buyer is qualified enough that we're that confident that if we do not close this buyer's loan, that the seller will receive $2,500.
Gotcha, gotcha, gotcha. So what do you do to make sure that you don't have your company never has to get that $2,500?
Absolutely, right? Because we really don't want to pay it. I mean, truth be told, we don't. So what we do is, and what I do as a loan officer is, I'm very thorough in the beginning. I do a lot of upfront underwriting. So when it does go to underwriting, the underwriter's like, wow, I love this file, approved, so I'm very good at that. So the buyer would have to provide all financial documentation to me, including like pay stubs and bank statements and W-2s and things like that. I would basically give a whole list of items that are needed. And then I would pull credit. I would look at debt to income ratio. We would do a lot of upfront work. That way we know when that buyer is going in and making that offer, that they're confident in everything that I've said in my letter that we've done, we've actually done. So the buyer is confident and the seller is confident that we've reviewed all financials.
Gotcha, gotcha, gotcha. Appreciate that. Now I'm gonna flip it just a
Yep,
slight little bit. Let's go to current homeowners.
sure.
The current homeowner is going through financial crisis and uh, other things that make it that they may need to refinance, and they're looking at the interest rate. What do you tell those folks? And just your general opinion of what you tell those folks, even though the interest rates are pretty high that everybody's looking at, but they're sitting on the fence, they're struggling, and they may not have to struggle if they come to you and refinance.
And refinance? No, great question. That's a very great question because I get people come to me now with that. So they may be in those low rates, like I call them at Obama rates. They may have a 3% or 4%. However, when I look at their debt and their credit card interest rates and their loan interest rates, once we kind of collaborate and put that all, they're paying way more than, let's say, 7% that I would give them. So a lot of times what happens is if they're, let's say they're paying $1,000 in credit cards every month, and they come to me and they say, well, Michelle, I have equity, but I don't want to lose my 4% rate or my 5% rate. And I'm like, well, look at what you're putting out monthly in these credit cards. You're putting out $1,000. And then once we look at the refinance and all the debt, and we actually wrap all that debt into the mortgage, in a lot of cases, in most cases, as a matter of fact, I see that their monthly outlay is less. So instead of them paying $1,000, they may save $500 and only have to pay $500 a month extra in a mortgage payment, but yet they're saving $500 a month in monthly credit card debt payments. So $500 a month in today's market, in today's day and time, at least, is a lot of money because people need every dime. So in those cases, a lot of times it does make sense to sit down with a mortgage professional or a loan officer and just look at the financials. Because again, like I said earlier, it's about the payment more so than your rate, right? So now this is a prime example of how payment is going to be less, but your rate is more. So you have to look at it to make it make sense.
Yeah. Thank you. Thank you. I
You're
appreciate
welcome.
that. And so I'm also into investing, and I have a few properties now. I'm looking to buy a few properties. Is there anything that you can help me with on that?
Oh yeah, there are a lot of good products out here for investing. There's a wonderful new product that is has a lot of hype around it, and I believe in it because I am too, and I've used this product. It's called a debt service coverage loan, and with these loans, investors are able to gain multiple properties, whether they want to flip them, whether they want to hold them for a period of time, and those properties do not go on their credit report, which makes it nice because now they don't have to go against debt to income and things like that. So do they require a good credit score? They do, because you become the personal guarantor. However, it does not go on your credit report. So if you do go to buy other things, that mortgage won't show up. So it's a very good product, whether if you want to flip homes or if you want to be a buy and hold investor. Like I said, I've personally used it, so I'm biased, but it's wonderful. It's great. You can build your portfolio a lot faster with that product.
Folks, it's time to build wealth.
It
It's
is.
time to get out of the that situations that you're in. And so and even with your home buyers, where we started at, you have to stop looking at what the interest rate is and look at what your situation is, and
Yes.
then move towards resolving your situation. And so if your situation is you have a bad landlord, um, you want to start building wealth, and some of the other things, your family may need to move out of that rental property because maybe that's a 2 bedroom and you need a 3 bedroom, and then you also want to actually compile building wealth, and at the same time, then now may be the time for you to buy, because you can't wait. I'll tell you a quick story. In 2018, after my daughter graduated, she was I found a nice little 2 bedroom house in Baltimore, right? That house was $78,000, and she made good enough money and had enough money saved to be able to buy that house.
Wow.
That house would have probably been only about $600 a month or so.
Yes.
Right now, that's in that same area, that same house in that same condition is 150. It's double.
It's double. It's double. Yep.
Now, when we look back, it's like,
Mhm.
man, it's total regret because
Yep.
the perfect opportunity
Yep.
to be locked into a $600 or so payment,
Correct.
entering the world as a 20-year-old.
Yep. a
Like
hundred
you
percent.
wouldn't have been able to beat that. But
Nope.
instead, she had to go out and end up in a one-bedroom paying 12, fifteen
And
hundred
more,
dollars a month
right?
or
Yeah.
more.
Yep. Nope. That is so true. And that's another reason why we should not get caught up in interest rates and look at what real estate can do for us in general. I had a client as well, similar, but she actually did buy. She listened to me, and she actually bought a house in Brooklyn, Maryland. And she was just like, Michelle, her landlord was selling it because he owned two properties next to each other. And she was just like, Michelle, I'm just not sure. I mean, it's okay. I mean, I was like, listen, just do it. Like it's a good price. He renovated. It wasn't the best reno, but it was good, right? So he renovated it. Just do it. So now she's thinking about getting married, and she's like, we're looking at what the houses are going for over there, and she has like over $60,000 worth of equity, and this was during COVID. So now she has 60,000. So if she wants to move, she'll have enough money to move and put some money in her bank account over a house that she was, I'm not sure about. I'm like, listen, it's real estate. Just trust me on this, right? And so yeah, so now if she steps up, she'll have money in her pocket and she can buy the house without bringing money from her pocket to the table.
And
So
don't listen to, unfortunately, folks, don't listen to mom and dad and
mhm.
grandma and cousin, aunt, uncle who saw 2008 crash. We can't, and and this will help you in your general life. Everything that because something happened to you in the past don't mean when it if it comes back around, it's going to be the exact same way, the exact same thing. So
That's
your
correct.
guards are up for something that is not going to come back in the same way. You know, the only thing that came back in the same wave I'm a joke about is Michael Jordan that came back, but they costing people mad money.
Yeah.
But outside of that, it's a thing. Huh?
I'm agreeing with you. I'm giggling at
Yeah,
you.
but outside of that, the only thing is yes, things happen. We have arenas. We're going to have recessions,
Yeah.
right? But the recession does not go do your history lesson. Recessions normally the same industries don't get affected the same way in each
Correct.
recession. And so when you understand that, you have to sit back and you have to look at what your situation is and then pivot and move per your situation, right? And so that's just it. So you have anything else that you want to share with us?
No, this has been wonderful. I totally agree with what you're saying. I mean, real estate does kind of like change, I feel, every 3 years. There's just a different market, whether if it's going to be a buyer's market, a seller's market, rates are up, rates are down, a combination of all of them, right? So a lot of markets we've never seen before, like the one we're in right now, we've never seen it before. So all we can do is adjust. And so if you use someone's past experience, especially if it was a negative experience, and especially if they don't do this every day, I tell people that all the time too. Like if they're not a real estate professional, and they've only done this once or twice, maybe three times in their life, that is not the person or persons you need to be asking. You need to be asking a professional who can advise you correctly. So yeah, I mean, real estate is ever so changing. So it's very important to link up with professionals that are changing with the market.
Unfortunately, ladies, your dad that bought a house 50 years ago, he is not the one that you can pull you by the ear and say and be in that home inspection and try to tell you everything that's supposed to happen and all this other stuff. That's exactly why you pay the home inspector the big bucks to go through and do his thing and all the other professionals to help you out. Uh,
Absolutely.
you just can't go off of somebody who just did something because it's different. Every deal is different. Every situation is different. It's even
Absolutely.
tough to hear an agent say, "Hey, I've done this 20,000 times." Yeah, you've sold houses, but you didn't do it like this.
Yeah, you haven't done this transaction 20,000 times, right?
Yeah, yeah, yeah,
No,
yeah.
absolutely. Absolutely. So So,
Yeah.
yep,
So I really appreciate you
I appreciate
taking
you.
the time out. You're coming from enjoying yourself, getting a tan and all of that stuff to back into the craziness, and you took
Yep,
time to spend with us to give us a wealth of knowledge. And can you
absolutely.
tell the people how they can reach you?
Yeah, sure, absolutely. Well, I am Michelle Larkin, loan officer on Facebook, Michelle Larkin Bay on Facebook. I'm all over Facebook. I'm on Instagram as Michelle Larkin. My direct number is 240-381-5883. Again, 240-381-5883. That is my direct. And even if I'm out of the country, I will return your call and text. You can also reach me by email, which is mlarkin, Larkin, at smprate.com. So mlarkin at smprate.com.
Who are you with right now? Because I saw two companies out there.
Yeah, so CLG is both, they're collaborating.
Okay.
So CLG is like our team, and we're with Success Mortgage Partners. So yeah, so you'll see them together, and then you'll see them separate sometimes, but it's the same.
Got you. Well, appreciate you again.
Thank you again.
Folks, if you have any questions, then put them in the comments, and then I'll make sure that we respond. And you have all our contact information. Hey, look, we're here every week to actually give you information to help you, and we're the real estate news that you can use. But Marcellus Kendall signing off, another Hump Day Real Estate with Kendall and DMV. And Michelle, again, thanks again for taking
Thanks,
the time out.
everyone. You can
Have a
tell.
blessed one.
All righty.